Sadly, two of our key partners from the Financial Industry Regulatory Authority, Ms. Susan Arthur and Alan Sorcher, who's an assistant director at the U.S. Securities and Exchange Commission. They're both based in Washington, D.C., and they were originally going to come and do this presentation, but, of course, as we mentioned, the weather has them snowed in. So I'm going to fill in. I'm going to provide this information. And I will say that FINRA, the Investor Education Foundation, they are a supporter of a lot of these programs that we do, a lot of the outreach, a lot of the trainings. They provide us annual contracts to go out and specifically work in Indian country and do these types of trainings. So I had a couple of people that asked me when I wrapped up just now about future trainings, and yes, we are available to provide trainings, thanks in large part to FINRA, Investor Education Foundation. So they're a great partner. And of course, we partner closely with OST as well and work with the different fiduciary trust officers out in the field. And we put together some really, really good workshops. Okay. So this is the disclaimer. I always got to have one of these up there. So just a quick overview of SEC and FINRA, considerations when selecting an investment professional, avoiding financial fraud, and then some supplemental resources as well to help you make good informed decisions when managing money. So the SEC, Securities and Exchange Commission, okay, now they are specifically designed around securities and investment products. They protect investors and they maintain fair and orderly markets and facilitate capital formation. So when we talk about the different stock markets, the exchanges, the NYSE, New York Stock Exchange, the NASDAQ, it's the Securities and Exchange Commission that actually goes in there and regulates all these different markets and also a lot of the products, the securities, the individual stocks, the individual bonds. It's SEC's role to provide regulation for all those different areas of investment. Okay, so they oversee approximately 12,000 investment advisors, over 10,000 mutual funds and ETFs. That's short for exchange traded fund. Okay, so how many of us in the room are familiar with a mutual fund? What is a mutual fund? Raise your hand. Okay, a mutual fund is simply a collection of individual securities. They could be stocks, they could be bonds, or they could be a collection of both. Okay, so what's good about a mutual fund is rather than go out and having to buy individual stocks, which can be expensive and kind of risky and speculative, you can buy a fund that provides an overall basket of a large number of stocks or bonds. And they're very affordable. You buy individual shares, and these shares in the fund represent these larger, broader holdings underneath. So for an inexperienced investor that doesn't, feel comfortable going out and picking their own securities, a mutual fund can be a good option. They provide a lot of diversification because you can get a wide range of products under this larger fund. An ETF is simply a mutual fund that trades on a daily basis. So most mutual funds only trade once a day. They don't trade ongoing throughout the day like a stock does. An ETF does, however. They have an actual a share price that trades throughout the day. So they actually function kind of like an individual stock in that there's high volume trading involved with them. So they're kind of a new investment product that's come along in the last, about 10 years or so. And they're kind of an interesting development in the world of investing. So they also oversee broker-dealers and transfer agents, the national exchanges, the credit rating agencies we've been talking about. And FINRA, the Financial Industry Regulatory Authority, they're actually a nonprofit, but they fall within the supervision or supervisory oversight of Securities and Exchange Commission, and they do collaborate on a lot of projects together, a lot of investigations and things like that. Okay, so these are just some of the numbers. In 2014, for example, SEC filed over 750 enforcement actions, totaling approximately $4.2 billion in disgorgement and penalties. So when we hear about some of these big financial scandals, Enron, the Madoff scandal a few years ago, it's SEC that gets involved in these. They're the ones that do all the investigation. They're the ones that bring about the litigation. They're the ones that press for the settlements. So, they're big, big players in the world of securities and investment. Okay. Office of Investor Education and Advocacy. So it's not enough just to simply, regulate markets and regulate broker-dealers and securities and things like that. They also have a role in terms of educating consumers, individual investors, institutional investors. And that's why we have this partnership, and that's why we provide some of these trainings and outreach, because we've just learned that there's a lot of misinformation out there. Some of this information is kind of complex and it's hard to gather. So it's really, really important that they maintain some sort of an educational presence so that people are informed and responsible investors and they know what they're getting into. Okay, investor.gov, that's a website. It's loaded with online resources for investors and all kinds of information to help people make good decisions, watching out for fraud and things like that. Okay, so FINRA, here again, they're a smaller division that's within the overall realm of the SEC, and they are a nonprofit, largest independent regulator for all securities firms doing business in the United States. Okay, and they award grants and manage targeted projects focused on investor education and protection. So has anybody ever heard of the National Association of Securities Dealers, the NASD? Does that name ring a bell at all? Okay. Well, that used to be FINRA. So anybody remember that term, NASD, National Association of Securities Dealer? That used to actually be what FINRA is, and then they changed their name to FINRA about 10 years ago. So just FYI. Not really sure why they did, but they changed their name. Okay, so let's talk a little bit about some of the psychological and emotional elements that come into play with fraud, because that's really the bulk of this presentation, is getting us to have our guards up and just be on the lookout. A lot of people, anytime there's money involved or investment, just fraudsters are there. They go where the money is. So unfortunately, investment fraud and other types of fraud are very, very real. And sadly, many Native communities have been targeted by fraudsters, both institutional investing, fraud type related scams, as well as individuals. And I know, we've talked about land buyback, and we've heard a lot of horror stories about people being taken advantage of after receiving land payments and things like that. So this is all very, very real. Okay, so information is complex. Decision involves risk and uncertainty. We want to see things positively, and a conflict between what seems best in the short versus the long term. So these kind of situations are when our judgment, our decision-making abilities are impaired. Okay, so this is what we really want to watch out for. Okay, so this is interesting. 80% of investors believe they are above average at spotting fraud. So the real takeaway here is we're all susceptible. Nobody is immune from being victimized. And it's like that old saying, the poker players say, well, if you can't spot the sucker at the table, you're probably it, right? Same thing holds true. People just, generally, so often they think, well, I would never fall for a scam like that. I'd never be suckered into that. Scammers, fraudsters, they are master manipulators of human emotion, and they know exactly what buttons to press, and they know when to get people when they are vulnerable, psychologically, emotional, vulnerable. And we're all victims, potentially. Just not necessarily all victims of the same scam, but sooner or later, all of us could become victims. Okay, so let's give an example here. Let's talk about a certain type of investment scam. It's called a pyramid scam. Anybody heard of a pyramid scam? Raise your hand. Pyramid scam. Anybody ever been involved with a pyramid scam? Been approached with a pyramid scam? Okay, so I just handed out a bunch of $100 bills. So I'm going to suddenly switch roles here, and I'm no longer the financial educator presenter. I am now a con man, and I'm coming into your community, and I say, hey, I've got a great deal. If you invest your money with me, $100, I will double it. I'll double it in 2 weeks. Who wants to take me up on this? I'll double your money. Okay, so I have Raylene in the back. She's no fool. She wasn't born yesterday. She's like, absolutely. So I have $100 from Raylene. Now I've got to double it. So I come over here to these two folks right here and say, folks, I'll tell you what, I'll double your money in 2 weeks, $100. So they are willing investors. So now I've got $300. And I owe Raylene how much now? I owe her $200. So I take the money they just gave me and I give Raylene $200. So now she's doubled her money. She's happy. She's thrilled. She's going to run out and tell all her friends, hey, this guy Shawn, he's for real. He's for real. He doubled my money, doubled it. 2 weeks. Okay, the problem is now I have two folks up here that I've got to double their money, right? So I need how much money to double theirs? $400, right? So I've got one right here. There's 100, 200, 300. Okay, one more, 400. Okay. So here we go. 200, I'm a man of my word, 200. Okay. So now I've got two more people involved. They're excited. They're thrilled. They're going to go out and tell more people and more people. So do you see what's going on here? Now that I've got these people paid off, okay, I have how many more people I have to make whole again? 4. And how much money is that going to take? $800. And once I pay them off, then how many people am I going to need? 16, 32, 64. It's a pyramid, right? It keeps growing and growing and growing. And there's nothing behind this because the whole time I'm just skimming a little bit off the top. There's no actual product here. There's no stock. There's no company. There's no commodity. I'm just using the proceeds of my new investors to pay off the old investors. It's called a pyramid scam. The original term was a Ponzi scheme because the guy who invented it during the Great Depression, his name was Charles Ponzi. He made millions, like, back in the 1920s doing this scam, okay? So here's ultimately what happens. So, oh shoot, what did I do? Okay. So this is assuming that we have a level 13 Ponzi scheme. And instead of you starting out with only one person and going 2, 4, you start out with 6 people. So your first level is 6 people. Your second level is 36 people. By the time you hit level 8, you need more than 1.5 million people to keep your scam going. That's more than 3 times the population of the city of Tucson, okay? And by level 9, you need 10 million people. Well, the entire population of the state of Arizona is only like 6.5 million people. So you can see how this thing becomes totally unsustainable. By level 11, you need more people than the U.S. population. We only have about 300 million people in the United States. And by level 13, well, geez, there's only 7 billion people on the planet. So by level 17, you need almost twice the population of the entire planet. So you can see this thing does not sustain itself. And the Bernie Madoff scam, that was a pyramid scam. It was more sophisticated than this. They actually had investment statements, and they had like these, fake securities that they were selling. But it was the same concept. And that was a $50 billion scam, Bernie Madoff. So these are real. So say I want to purchase 100 shares of Nike stock. Well, I can, work with a broker or a dealer who can go out and actually put my order into one of the exchanges and complete the transaction so I get my stock. Okay? These are the guys that are actually on the floor. They're actually trading and buying and selling investment products. Investment advisors, they can be broker-dealers, but really an investment advisor is just somebody that provides some sort of oversight or guidance or plays some sort of a fiduciary role in managing money. So they're not necessarily on the ground actually trading securities. Okay, so that's the differentiation. And one thing to remember is SEC does play a role in regulating broker-dealers and investment advisors, but it's more focused on handling the actual securities, the stocks and the bonds and the markets. And FINRA, they play more of a role. They're larger in terms of handling the actual brokers and dealers and investment advisors, okay? So, okay, here's broker-dealer information, investment advisor information. Okay, so how do I choose a broker-dealer or investment advisor? Okay, it's an important decision. Here are some tips. Read this information carefully, obviously. If you don't understand something, ask. So here's a little example that I always say, because it's really confusing, because there's all these different people out there that are, presenting themselves as investment advisors or selling securities and things like that. And I really think about, like, when you need to buy food, when you need to buy groceries, okay? Like, let's say, for example, we need to buy 4 things to cook dinner tonight. We need a gallon of milk, we need some spaghetti sauce, we need a loaf of bread, and we need some ground beef, okay? 4 products, okay? Now, where could we go to buy those things? We could go to a supermarket, right? We could go to a convenience store, okay? If we go to a supermarket, we could go to like one of the really fancy supermarkets like an Albertsons, or we could go to, like a discount supermarket. Doesn't matter where we go. A gallon of milk is a gallon of milk. a name brand product of, spaghetti sauce or something like that. It's the same product. It's just where we go to buy it. And what determines where we go to buy it? Well, it could be the distance we have to drive. It could be the price. It could be we like the store. It could be the customer service, okay? And investments are very similar. Pretty much everybody is selling the same products, more or less. The same types of funds, the same types of stock products or fixed income investments. It's a matter of which advisor or which person that's, you're dealing with best suits your needs and what you want to deal with. Just like going to the supermarket, okay? Some charge different fees, different fee structures, and it's really important just to figure out what it is you want from an investment advisor or a broker-dealer and select one that really matches up with those needs, okay? Do your own research, recommendation each time you think about changing or making an investment, ongoing investment management. So these are just some of the different, questions or things you need to ask when looking at investment advisors. Okay. And I apologize for just reading off the screen. I know that's a no-no for PowerPoint, but I'm a last-minute fill-in here. Okay, so how do they pay? How do you actually compensate these people for managing your money? Well, here's where it gets a little complicated because there are a lot of different ways that investment advisors or brokers actually charge for their services. So some might charge an hourly rate, a couple $100 an hour to oversee a portfolio, to, review some holdings. Some might charge a flat fee, $2,500, we'll do this, we'll do that. We'll design an investment policy statement. Others will charge a commission based on the securities that you buy or sell. So every time you make a trade, you buy, a block of bonds or you buy a block of stocks, they will charge you a percentage of what the total cost is. A fee, sometimes called a load, those are really common in the mutual fund industry. And earlier I had a woman that was asking some questions about fees and mutual funds and things like that. So mutual funds are tough in terms of how to actually analyze the fees because sometimes they'll charge you an initial fee when you contribute to the mutual fund, but also they will charge an ongoing fee, a management fee, just for managing the fund. And that's not a percentage that you actually see that you pay up front. It's just a small percentage that's taken out. They sell off shares of the fund every year to pay that fee back to the managers. And it's very, very hard to see. You won't really see that fund on a balance sheet or on an account statement. The only way you'll even know what it is if you look at the fund's prospectus and you see it listed there. So again, this is a way that they actually, extract money from investors, but it's not directly out of their pocket. It just reduces the value of their holdings. So these are just some things to think about in terms of fees and managing them. Okay. So big thing, just ask these folks, how do you get paid? Just straight up, hey, how do you get? When I was on our investment committee, they would always come in, these guys, and the fee structures were always very complicated, and they would really beat around the bush. A lot of times they were not very forthcoming. I mean, once you really pressed them, they would tell you, but you really kind of had to hammer it out of them. How exactly is this account set up? What is the fee structure? And you have a right to know, okay? So credentials and experiences, there's a lot of different types of people, like I mentioned earlier, who sell investments or who deal with, financial management. And there's all kinds of different licenses and professional certifications and designations, and it gets really, really just a ton. I mean, in some ways, I think there might be too many. I mean, it just gets really bogged down. So, and again, some of this stuff is also regulated at the state level. So, in certain states, you need certain licenses and things like that to manage money. So intermediaries also have a wide range of educational and professional backgrounds, also have designations. So don't accept a professional designation as a badge of knowledge without knowing what it means, okay? So here is a website, and this is actually on FINRA.org's website. And you can go in here and you can actually just select one of these designations, like a CFA, Chartered Financial Analyst. That's just one of many. And you can actually see what it means, and they can give you specifics on what types of services or what types of expertise that individual has. And this is a good tool, just so you can kind of get a read on what these people's skill sets are. Sometimes I see these guys at conferences, these investment guys, and they've got these business cards, and they've got they've got enough initials behind their name to spell out the alphabet. I mean, they've just got so many, it's hard to keep track of. Okay. So disciplinary history. Have these people ever been penalized? Have they ever been, had any kind of a negative ruling held against them with regard to managing money or with a client? So this is really important. And they actually have a record of this. So FINRA has a page on their website called Broker Check. And if you ever have a broker that you're dealing with, you can enter their name into the website, and it'll tell you if there's ever been any kind of an infraction or any kind of a penalty or any kind of a fee or any sort of issue with their credibility or their how well they manage money in terms of whether or not they have misrepresented investments or committed any kind of questionable act. Okay, check whether the person that's listing your investments is registered. So yeah, SEC, broker check. Okay. Registered, problems, experience, licenses. So this information is all available on Broker Check. So you get a really good read on somebody. If they come up on Broker Check, you'll know what's going on. Okay, what about fraud? Okay, so I'm just going to talk a little bit about fraud. I'm going to wrap it up. So annually, $50 billion every year is lost to fraud in this country. 8 out of 10 Americans, on average, are solicited with some sort of a fraudulent offer. And sadly, it's our elderly in our communities that are most likely to be victims. And what I've learned a lot of times, not only is it elderly people that are victimized, but it's family that are victimizing elderly people. It could be something as simple as, taking grandma's Social Security check and forging a signature on it and taking it to the bank, something like that. So a lot of money is lost, $50 billion, but there's also these other emotional and psychological ramifications: stress, anxiety, difficulty sleeping, depression. These are also very, very real ramifications from fraud, and sometimes I think that's actually worse than the money that's lost, or the emotional and psychological long-term effects. Okay? So they use emotion, compassion, fear, all these kind of, key human emotions that they can just tap into and get people when they're vulnerable. Okay, so these are the 5 persuasion tactics that they use. Source credibility, when somebody will present themselves as, maybe an upstanding member of the community or a long-standing, highly regarded professional from another city. Scarcity, that better act today, buy now while it's hot, deal only good for one day. Reciprocity, somebody might do you a little favor, offer you a discount or something like that to earn your good trust and get you established into wanting to participate. Social consensus, like this Ponzi scheme, right? These folks, they invested, they made their money, Raylene made their money, right? Well, if my friends are doing it and they're making money, it must be a good deal. I better get involved with this too. That's a really powerful persuasion tactics. And then, of course, phantom riches is when you just dangle that carrot, we'll triple your money in 2 weeks. The old saying, if it sounds too good to be true, it probably is too good to be true, okay? So how many of us have ever seen this one? I have a very serious and genuine international bank transfer involving the sum of, and they're always horribly written, right? Like this is actually, it's not $11 million, it's 0.1130, which is like what, less than $1, I guess, right? Always horribly spelled. And we think, who in the world would ever, what, I have relatives, I have elderly relatives that would fall for something like this. They really would. You just never know. And you think, oh, well, that's just, email, whatever, that's easy to spot. They can come on text too. It's illegal to use cell phones for solicitations, but I just got this on my cell phone a couple months ago. No idea how they got my number. For any of you that don't want your information or don't want to be called with weird solicitations, you can go to the National Do Not Call Registry. There's a website, or you can call the 1-888-382 number, okay? Gets you off those lists for 5 years. 5 years. If you want to do it permanently, you can do that, but you actually have to you have to go online, and they give you you download a form, and then you mail that form in, and you can be permanently removed from the Do Not Call Registry, okay? So I've got a lot of other scams, tax scam, student loan relief scam, romance scam. This is a big one, right? eHarmony and all these dating websites. In fact, I worked with a bank in Gallup, and they had an account holder that met some guy online, and, at first it was all cupcakes and Kool-Aid, we're in love, this and that. A couple months into it, hey, can you help me out with some money? This guy cleaned her out. Cleaned her, I want to say like $30,000, just wiped her out. This was in Gallup, New Mexico, okay? The inheritance scam, and I believe OST Director of Financial Education, Brian Ross, has had some experience in dealing with beneficiaries here. These people are really, really resourceful, and they're really shrewd. They'll look at obituaries. They'll troll local obituaries, and they'll find when somebody passes away. And, next of kin are listed, right? So they'll find, check and see if any of those people have listed phone numbers. In one case I know of, they found a next of kin with a listed phone number, called him, and represented themselves as attorneys of the deceased and said, you've got an inheritance coming, and it's pretty sizable, but you need to file some legal documents. There's going to be some fees involved. Send us a couple $1,000, and we'll get everything rolling. Total scam. But you know what, right? I mean, what a horrible time to be victimized. But that's when you're vulnerable. That's when you're emotional. That's when people like this can get you, okay? So I'm going to wrap it up now. The folks from FINRA and SEC, although they couldn't make it, they sent some wonderful resources, the playing cards, some of the different brochures. Take a look at all that stuff, and I know they've got a lot of extra copies, so if anybody would like more copies of that information, we can have it mailed out to you. Just let me know. I'd be more than happy to send you folks all the materials that we have, okay? Thanks.